Hey traders, Raghee here, and in this free video I'm going to talk about a psychological phenomenon that a lot of traders experience during events like this, where there's a narrative of a lot of fear in the marketplace, and at the same time there are folks that are reminding us that in some cases we're just a handful of percentage points away from, just off of all-time highs. So how do you reconcile the fact that there's one conversation that says we should be trading at much lower lows, or could be, and another psychology that says, well, we could certainly head back up? I'm really of both camps. I think we're probably going to do something very similar to taking back some of the losses we saw this week. And I don't believe we necessarily put in higher highs. And if we do, it actually just sets up a move a lot more like we saw last October, November. And I also believe that as long as you stay above the mean, for example, on the NASDAQ, there's a good chance so too will the S&P, because I believe because of the weighting, the S&P is really like a little dog that the NASDAQ takes for a walk. Take a look at the weighting of the S&P, the dominance of tech. Of course, yes, there is healthcare and financials, but it's mostly still a lot of tech in the weighting, so it will move a lot like the NAS. And again, it too is still staying above the mean. So it's easier to be looking at this as an oversold buy zone than it is the beginning of a downtrend. Although, again, we could see something like that, but I think we're going to have a couple rips higher before the market starts to think about the recession fears. And I want to talk to you guys about the average, and this is something that I've had on my desktop, okay? Here, this is an image, and I don't know who to credit this to. I see things on the interweb and I download them, I do some research, and if I like them, if they pan out, I keep them. I wish this were actually, and I think I do have one, but I wish this were actually a 2-year, 10-year curve. But take a look at the average amount of time before we get to the recession. This is not tomorrow, gang. This is not tomorrow. And we still don't know really the lengths to which the FOMC might move in an effort to keep up with the global accommodation, the global dovishness that we're seeing. All right, what else is really interesting to me? Is the volatility here to stay? Absolutely, gang. The volatility is here to stay. This is, again, just a neat little look at 5% correction. How many do we get per year? We had 5 last year. We're up to 2 right now. These are not unusual. High volatility is here to stay, gang. That's something else to look at. When you're trying to reconcile, what's happening with the markets with, the emotion we're hearing right now, the numbers do help sort of calm, at least for me, calm me down. It is about the math as far as I'm concerned. So do I think we're going to bounce? We could. Do I think we see lower lows at some point? I actually am, just as I was last November, October, November, I am actually quite bearish. The macro is bearish, but the timing isn't there yet. We need the FOMC to go ahead and, who knows, surprise rate cut. There's a lot of talk about maybe a 25 basis point surprise cut, and then another 25, or who knows, 50 in September. Here's the thing. I need the Fed to go ahead and cut another 50 basis points or so before we actually start realizing that it's not helping, that the macro and the global economic slowdown is here to stay, and we can't cut our way out of it. So let the market rip higher a couple times on that kind of action. After that, I get incredibly bearish. And it's almost going to feel like Vujade from last year, quite frankly, and when I got very bearish on the market. But even remember when we sold off early October, we still bounced. Now, I'm not going to be surprised to see a move like this, and then I'll start looking out for things like the propulsion dots and the overall downtrend of the wave. In other words, I'll still look for some technical structure before I start getting really bearish. So that's what I see right now, whether that be the NAS, whether that be the S&P, and I'm already short the Russell. We continue to stay short the Russell. We've taken some profits on the Russell. Let me type this symbol in right, and we'll wrap up this video. But we're already short the Russell. We've taken profits, and this is the one broader average that I'm still looking for more downside in, but we're short from up in here. which means this area here was the initial target. And then we'll see if we can't break down to lower lows. Getting rejected by the value area low for the year, maybe. So that's the one place that I am still pretty bearish. And we'd like to see a bounce, and maybe we'll short again. All right, gang, that's it for today's premium video. Free video. And I will see you in the next update. Oh, by the way, I would highly recommend, if some of what we've been talking about the last few days and weeks have been interesting, on tomorrow, actually, Thursday, we're going to be doing a free video, free webinar. There we go. There's the link. And I'm going to be talking about the way that I've structured my current book. I'm going to show you the actual account. We're up 73% since since basically Memorial Day. And I'm going to show you how we've structured that book, what we've done, and walk you through that. So that's at simpletrading.com/trend. All right, I'll see you in the next update.